What's up, guys? This is an 8-minute video all about the housing market, whether or not it's going to crash. You guys want to watch the whole thing? Because at the end, I talk about how you guys can take advantage of the market today, make investments, make money in today's market. Come on, let's get going. Here is what I believe is likely going to happen with regards to a housing market correction or a crash or whatever it may be. I've seen numbers in the 30% range of real estate taxes that are in arrears right now in the United States. That is an opportunity I think that you're going to see more of, as opposed to properties ending up all the way on the foreclosure steps. But at some point that lifts. For those of you guys that were investing a while ago, between 7 and 8, the Great Recession happened that absolutely decimated the real estate market. You guys know that the real estate market got absolutely crushed in that time frame. If you guys like what we do on this channel, make sure you smash the subscribe button and like this video, and I'd love to hear from you guys in the comment section. Single family homes specifically, all those properties got cut way down in their value. Some even got cut in half or less in that very, very quick time frame. The banking systems were backed by Wall Street, by these mortgage-backed securities, and by a lot of nasty stuff. Again, watch The Great Short. It talks all about that, about a very specific person that had a lot of mortgage that she shouldn't have had. Those lending guidelines were changed a lot through things like Dodd-Frank, and you can't do no doc, just pretty much have a heartbeat and a pen to get closing on a real estate deal anymore, or to get 100% financing with no documentation, no credit score, no problem, one of those kind of things, right? That's not the market that we're in anymore, of lots of super risky mortgages that are propped up by Wall Street money coming in. It is a different system now. Those of you guys that are predicting a market crash, if there is a market crash, it's not going to be like it was in 2007, 2008, because the structure of the economic system that we're in now and the way that real estate is financed is not the same as it was back then. So we're not going to have the same thing now that we had then. That was a different thing. So those of you guys that are waiting on things to get cut in half in value, you may be waiting for a very, very long time. Now, hey, my crystal ball is broken, but it's one of those things where it's a very unlikely probability of the same thing happening again. Here is what I believe is likely going to happen with regards to a housing market correction or a crash or whatever it may be. We've had COVID that's hit, obviously. COVID is on its way out and we're climbing our way back out. But because of COVID, the federal government has done two things. They've pumped a lot of money into the economy. And I'm not a politics, left-right person. I'm not making a political statement here, but either way, both parties have pumped a lot of money into the system that has really thrown a lot of things off. Some would say that when that happened, it really saved us from going into an absolute decimation in economic falling off a cliff by the government pumping in some money. Now that money's still in the system and they've pumped even more money. Some would say more than what we needed. The second thing that's happening is the federal government has put a stay on everything from evictions, right? And it's also put a stay on foreclosures and things like that, partly because during the heat of COVID, courts were closed, so you couldn't get a foreclosure sale or a sheriff's sale going. But now those things have started to open up, but there's still been restrictions on people that can be foreclosed on in their homes or be evicted from their home. I mean, it can't go forever. So at some point, they're going to get lifted, and it is unknown what's going to happen to the market when those things come up. I will tell you, if you research the amount of real estate taxes that are unpaid in the US right now, it has gone way, way up. Some have researched this, and I've seen numbers in the 30% range of real estate taxes that are in arrears right now in the United States. Now, does that mean that 30% of the mortgages in the US are not going to get paid and 30% of properties in the US are all going to get foreclosed on? Of course not. Real estate taxes go in arrears all the time. So there is a major contribution to that for people that just pay their taxes less than once a quarter when they're supposed to. They just get themselves caught up. And a lot of folks are going to get themselves caught up when the forbearances get lifted. But I believe that there is going to be an increase in foreclosures in the single family market and in the commercial market across the board. Everything is, you're going to see a lot more properties get to the courthouse. Now, before you go get excited and go get in line at the courthouse steps, real estate investors and all you sharks out there, right? They're wanting to get great deals or wanting to take advantage of a glut of foreclosures. Bear a few things in mind. The courthouses have not hired lots and lots of staff to handle all of these new foreclosures and things that are coming into the pipeline. So it's going to take a while to process all that stuff. The federal government can also continue to stay these foreclosures and stay these things off, and may pump even more stimulus into the system to help those folks get caught up. So before you start licking your chops, it is unforeseen, it is unknown on how much of those things are really going to cause a real drag on the market. I do not see a huge fall off a cliff like we had last time, but there are going to be some deals to be had. An opportunity that we see coming into the market is investing in distressed notes. That is not a new concept. That's something that's been going on forever. And if you guys want to read a book, read my buddy Dave Van Horn's book, The Guide to Note Investing, which is on Bigger Pockets as well, if you guys want to learn about that. But distressed notes, in essence, works like this. You can buy from a bank a note that's non-performing. And that's a nice way of saying that the person that owes money to that bank is not making their monthly payments. It's a non-performing note. So you can buy that note from the bank, probably at a discount because they get it off their books. They can then go and lend that money again, and they're willing to sell it at a discount. So you can buy that non-performing note and then contact the homeowner and help them get back on their feet, help them get their monthly payments going again, do a workout and make it a performing note, which is a nice way of saying them now making their monthly payments again. DeRosa Group as a company is going to be getting into distressed mortgage notes because we want to help people out. We want to make investments that make sense, and we want to be a part of the recovery of everything as we climb ourselves out of the COVID black hole that we're in, right? So that is an opportunity I think that you're going to see more of, as opposed to properties ending up all the way on the foreclosure steps. Because as I said before, it's going to take a while to get a lot of this glut, the pig through the snake, the pig through the python, if you will, of getting all that through the court systems. You're better off working with banks directly, and there are means to do that. Again, check out Dave Van Horn's book on note investing to hear more on that. That is something we're going to be doing. Here's a few tips to close it out on other things you guys should be keeping an eye on that may drag the real estate market down or may drag us into a further crash. The stock market, right? Stock market's been doing this, and some would say a lot of it has to do with all that printed money that's out there, is just finding a home, finding its way into equities, and finding its way into driving things up, right? That is a theory, probably true, right? But the stock market may continue to go up, and that's something that may continue to happen. But at some point, what goes up must come down, and it hasn't really come down very much lately. So a big correction in the stock market could cause a lot of companies to have less faith in a recovery and could start pulling back on jobs. If jobs start dropping off again and we don't start adding the jobs that we lost during COVID back, I believe that will cause a major detriment on the housing market. Two things you need for housing: lending, right? And that's what caused the first crash in 2007, 2008. That was a lending issue, right? And I don't think we're going to have that again. On the other side, you need income, right? You need money coming into people's pockets so that they can pay those debts. Now, that issue, the connection between income and debt, was put on hold during the forbearance and the mortgage foreclosure, the moratoriums and things like that, right? But at some point, that lifts. Whenever that point is, can't last forever, but at some point that lifts, and the disparity between income and what people owe is going to become a bigger issue if we see a drop in the income of people in the US through layoffs, or through companies shutting down, or through a stock market crash that could cause a lot of these companies to have less faith and hire less or start laying off. Keep an eye on that, because that is something that could cause a major pull down in the housing market. The one thing you guys can do as real estate investors, regardless of the crash, is do deals that make sense. Invest in properties that produce cash flow now. Do a little bit less speculation and a little bit more of investing for things that make sense today. Because I can tell you, my company was investing very heavily in 2007, 2008, and the properties we had that were performing well before the crash continued to perform well. Maybe this tenant had to move out because they couldn't afford to stay there anymore, and a new tenant had to move in. But for the most part, we were able to weather out the storm with cash flow coming in and weather out the downturn and that. So I believe that if you guys make deals that make cash flow today, whatever happens to the housing market, you're going to be able to ride it out to the next. Because as T. Harv Eker said, don't wait to buy real estate. Buy real estate and wait. And if you do the right deals, you're going to end up okay, regardless of what happens to the housing market. Hope there was some good tips for you guys in there. If you like what we do, make sure you leave a comment below. Smash that subscribe button hard. Smash it for this channel. You guys can join in all the conversations we're having here. I appreciate you guys always. And as I always say, have a great and profitable week.